Welcome to Market Minutes. I'm Sulhi Azman, joined by Nadia Hassan. Companies in the news today, Nadia, we have none other than Public Bank Bhd. The name is synonymous to Tan Sri Teh Hong Piao. Today, the stock closed 0.22% or 4 cent higher at 18 ringgit and 38 cent today. Now, there's a news front going on with this company today, right?
Oh yeah, so of course the reason why they did is because they announced their 4Q net profit. And these guys are always an anomaly. Never mind that they're our bank also, but they are an anomaly in the sense that Public Bank has found its niche, and there's a reason why Tan Sri Teh Hong Piao has an almost reverence among his shareholders. Do you remember, I don't know if you remember, but years ago when Tan Sri Teh was a bit ill in health and he had to be taken into hospital, they actually released on Bursa Malaysia saying that just to inform you that Tan Sri Teh is feeling ill or whatever, but he's recovering well. They actually issued on Bursa Malaysia a warning, like you would have a profit warning or whatever. That's how tied he is and how people see the fate of Public Bank. Yeah,
I mean, if you go to the AGM, right, people were singing to him every single day, every single minute during the AGM, singing him some good songs and whatever. Anyway, now net profit for FY 2015 managed to surpass 5 billion ringgit.
Yeah, exactly. So if they give you dividends like this, wouldn't you sing to him? 32 cents a share, full year is 56 cents. If you actually count on it, it's 42.7% of the entire group's net profit.
Well, that is certainly a very handsome gain there for those who are actually
I'd sing to him too if he gave me that.
Company. Anyway, Tan Sri Teh Hong Piao said in a statement that the results reflected a consistent execution of group's organic growth strategy. Well, they have always been conservative with their managements, right?
Yeah, they've been conservative with everything, including management, branches, all of that, because these guys know how to do the SMEs. If you actually looked at it, yes, a lot of it came from also being very, very good with SMEs, how they deal with the clients, how they ensure that, Uncle Ang, who runs a tire shop in Puchong, actually is well funded and managed for. I mean, this is what you get for Public Bank. This is what the image you get. And interestingly enough, these guys have not laid off anybody. We've seen CIMB, we've seen the international banks. All of them have talked about streamlining, guys. These guys have not. I think because their cost structure in general, they've kept it under a very tight grip.
Yeah, correct. And if you look at the cost-to-income ratio, I'm sure it's very, very, lower than the market average. Now, if you look at the impaired loan ratio, the NPL, it's improved to 0.5%. Now, that's a very small amount compared to any other banks, which hovering 3% to 4%, for instance, as at December 2015.
I think Tan Sri Teh would, not to put words in the venerable man's mouth, it's a case of the tortoise and the hare. What do you want to be? Do you want to be the hare or do you want to be the tortoise? So these guys are always talking about, going ahead. I think in the year, we've already talked about how tough it's going to be for the banking guys. Let's see whether or not Public Bank will be able to weather the storm, because they have. I mean, if you looked at the share price, it's still 18.38. It's still a massive, it's good if you actually hold on to it.
And I think it is the most expensive share price among the banks in Malaysia today. Anyway, moving on to Broker's Call, we have the plantation sectors, where yesterday, or in fact on Sunday evening, our Deputy Prime Minister, Datuk Sri Dr. Ahmad Zahid Hamidi, announced an increase in foreign workers' levy in many sectors, up to a maximum of 2,500 ringgit per workers.
And I can pretty much tell you that nobody was happy.
Yes.
Yeah, okay.
Crying.
I will repeat what I said yesterday when Top Glove had problems with this levy. The fact is, you can't do business if you have shock. You can do business if it's gradual. You can do you can manage anything. You can manage dancing pink elephants if you knew they were coming. But the fact is, this is what they didn't like. They don't like, oh, by the way, we're just going to increase this levy for you. We're not going to increase it 10%, 20%. We're going to increase it the full as much as we can.
Yeah.
So Plantation Index actually down, 1%. And we took that two particular companies today, of course, the big granddaddies, FGV and Sime Darby.
Correct. FGV was down 2.41% at 1.60 today, and Sunday was down by 2.25% at 7.40 today. Now, interestingly enough, CIMB research said that, this is going to impact a lot of sectors, particularly plantation, because 78% of the total workers industry are in the plantation segment. And this higher levy could also lead to the plantation companies' earning to be cut by 1 to 8%.
Yeah, so if you actually look at the earnings, they're already, not exactly the most stellar. If you look at FGV, they're in the red, even though top line grew by about 12.5%. Sime Darby also seems to be Sime Darby is the one where also down from about 34.4%. Top line remained fairly flat. So yeah, this is just another hurdle for them because we're talking about commodity prices. And I have said this over and over again. World Bank has cut 80% of the outlook for 80% of the commodities in the world. What do you think that actually means? So the fact is, if you looked at somebody like Alliance who doesn't have a call, they just made a note, they do think earnings impact to counters under their particular universe will be around 1.5 to 15.5% for the 16 to 17.
Well, on the contrary, Nadia, Public Invest Research, they maintain an overweight call on this plantation sector despite having, receiving this very, very rather shocking news from the government. And they say that they expect an increase to 4 to 6% for the majority of Malaysian plantation players, especially in terms of OPEX, because it's going to really impact them quite well. And they estimate that the cost of productivity will also increase by about 50 ringgit per metric ton, or 4 to 6%. Now, this is really going to weigh down on many earnings of the companies listed in Malaysia, especially the plantation folks.
Yeah, so this one will be just another hurdle for them to kind of face this year. We have to keep watching because some days they say it's not as bad as you think, some days it is. We'll have to see how it all balances out. At the moment, if you look at all the analyst reports, they do see, aside from Public Bank, they do seem to be erring on the side of caution, which is all you can pretty much do.
Yeah, correct. On that note, CIM Research maintains a neutral position on plantation sectors. Okay, on that note, that wraps up our Market Matters today. I'm Sulhi Azman, she's Nadia Hassan. If you want more information, you can always log into our website at www.dhmarkets.com or grab a copy of the physical paper at any suitable newsstands. Good night and good luck.